Affected by global risk aversion, Wall Street is longing for new catalysts, while volatility in the currency market has offered great intraday trading opportunities. The gloomy forecast by InstaForex analysts for yesterday came true. US stocks closed in the red on Monday, having extended losses for 4 days straight. The Dow Jones shed 162 points, or 0.49%. The Nasdaq closed with the steepest loss of 1.49%. The S&P500 went 0.9% down to close at 3,817 points. The benchmark stock indexes traded mixed in the New York pre-market. The Nasdaq came under selling pressure. The S&P traded almost flat. The intraday calendar for the index is seen between 3,780 and 3,890 points. The three stock indexes have tumbled over the last 2 weeks. The S&P has lost 2.1% last week. All 11 sectors included in the S&P closed lower on a Monday. The telecom sector showed the worst performance. Risky assets were badly bruised by the hawkish Fed and the ECB. Downbeat economic data increases the likelihood of a recession. Strong metrics, on the contrary, set the stage for a longer cycle of high interest rates. With such prospects, Wall Street is cautious about risky assets. The benchmark stock indexes have been under selling pressure since Wednesday, when Fed's chairman Jerome Powell came up with the hawkish remarks. The three indexes are on track to the sharpest fall since the financial crisis of 2008. Amid the empty economic calendar on Monday, investors again stoked recession fears due to tightening financial conditions. Besides, a lot of investors are taking a break at the year-end. Market heavyweights such as Apple, Microsoft and Amazon are printing losses. Tesla stock is highly volatile but remains under pressure because of the Twitter news. Meta shares went down as expected. The securities dropped 4.1% after the European Commission stated that the company could face a hefty fine of up to 10% of Meta's annual turnover. The fine could be roughly $11.8 billion if the Commission finds evidence of the violation of the EU antitrust law. On Tuesday, the news from the Bank of Japan caught investors off guard. The dovish regulator jolted markets with the changes in its monetary policy, relaxing control over a yield curve. In response, yields of 10-year bonds jumped to a new high and reinforced the yen. The Bank of Japan has been buying up government bonds worth billions of dollars to sustain interest rates at low levels despite high inflation both worldwide and in the country. Analysts say that if yields move in a wide range, this could attract fresh capital to Japan and strengthen the yen. Sharp price swings in the currency market set other assets in motion. However, the US stock market remained immune to the roller coaster in other markets. Traders are cautious, unwilling to open risky bets. Powell and his team sent a message that they need more evidence of a waning inflation and a slowdown in economic growth. In this context, the market is evaluating the data on the US building permits and the housing starts. Nevertheless, the fresh statistics did not dispel fears. The building permits in the United States dropped 11.2% in November from a month ago to 1.342 million, and this is the lowest reading since June 2020 and way weaker than the consensus of 1.485 million. Besides, housing starts grew to 1.427 million, more than the consensus. These metrics are enough to revive optimism on Wall Street. Meanwhile, major currencies are overcoming a burst of volatility triggered by the Bank of Japan. The US dollar index is no exception. It plummeted 0.8% intraday to 104, the lowest level since June. The intraday carrier for the index is seen between 103.80 and 104.80. The culprit for the greenback's fall today is the yen, which has appreciated by more than 3% after the Bank of Japan had unexpectedly doubled the yield range for the 10-year government bonds. The regulator put the key interest rate on a hold at minus 0.10%, but it allowed the yield of the 10-year bonds to move 50 basis points, either slide between 0.50% and minus 0.50%, up from 25 basis points previously. This move caused a spike in the yen. After the release of the US economic data, the US dollar index won back some of early losses. The real estate sector and consumer sectors, the sectors vulnerable to interest rates decisions, are losing momentum amid tightening financial conditions. Thus, despite the recent Fed's pledge to pursue the same aggressive monetary policy on inflation, the market is clinging to the hope for the pause in the rate hikes in 2023. Such expectations subdue the US dollar's strength. The loonie welcomed the decline in the US dollar. The USD CAD pair dipped 0.13% intraday to trade at about 1.3620. The currency pair is expected to trade in the intraday corridor between 1.3590 and 1.3670. The Canadian dollar is still trying to find a balance among the stronger US dollar, headwinds in the oil market, recession fears, and the domestic economic health. Fresh economic data from Canada revealed robust domestic demand. Retail sales, excluding cars, rose 1.7% in October on month, having rebounded after a 0.8% drop in September and having defined the forecast for a 1.4% increase. The strongest reading since May could revive the hawkish rhetoric of the Bank of Canada. Oil prices are trading slightly higher today at about $77 and $80 a barrel for Brent and WTI grades respectively. Energy demand is still dented by the COVID news from China. However, the grim outlook for the second global economy for 2023 overshadows the oil market. The World Bank downgraded its forecast of China's GDP. The lending institution said in the fresh forecast that China's economy could expand 2.7% in 2022, much worse than the official target of 5.5%. The forecast for 2023 is a bit better. The bank predicts a recovery to 4.3%. As for the crypto market, popular tokens perked up today, having regained some previous losses. Bitcoin dipped below $16,500 and rebounded shortly after. The crypto is not ready to test the lows of the year. The flagship crypto rose 1.23% intraday and settled at $16,800. Altcoins such as Ethereum, Solana, Ripple, and Litecoin are trading higher in sync. In the news front, crypto firm Voyager Digital is going to sell its assets to Binance.US as a part of the deal worth almost $1 billion after the investigation. Binance itself has to deal with an investigation and mistrust of market participants. Despite minor growth today, Bitcoin is closing the year with an enormous loss of 60%. The whole crypto market has shrunk 1.4 times. According to CoinShares, crypto funds received a net inflow of $498 million in 2022, sharply down from $9.1 billion in 2021. The intraday outlook for the Bitcoin suggests a range of $16,600 to $17,000. Good luck in your trading and see you online tomorrow.